Hey everyone, Jeff Dorman, Chief Investment Officer at ARCA, back for another edition of That's Our Two Satoshis Live, where we talk about the digital asset market. For those who are new to this, we've been doing this for a long time. We write about the markets every week on our blog at ar.ca/blog. The market recaps called That's Our Two Satoshis. Almost 6 years running now, writing these recaps. You can read the full write-up or you can listen to us talk about it. But before we get started, this commentary is not intended to be investment advice, investment research, or a recommendation. Please consult your investment professional for your own circumstances. So I'm joined today by ARCA's VP of our Solutions Group, Charlie Russell. How are you, sir?
I'm doing well. Thanks, Jeff. Happy to be here.
Yeah, so we're going to talk about a lot of stuff with regard to some solutions that can happen in the market. But before we get in there, as always, let's talk a little bit about the markets. Pretty boring, actually, what's going on in the digital asset market. Has been really for 4 or 5 weeks. I think historically, people think that boring means down. Boring doesn't only mean down. In fact, in most markets, debt and equity specifically, boring usually means higher because it's too expensive to short, and you end up seeing just passive investment gains. In crypto tech, usually when it's slow, the market goes lower because people take it as a sign of disinterest. But I don't know if you'll get that this time because volatility is so low. But what we are getting still is just a ton of negative sentiment in the market, as indicated by positioning in terms of one of the lowest percent overweight of equities versus bonds since March of 2009. So equity investors very bearish. And on top of that, you just continue to see more and more problems at the bank level, right? KRE, the regional banking ETF, if you graph it versus Bitcoin, it's been basically perfectly negative correlated for the last 6 weeks, and for real reason. As banks continue to suffer, not just from an equity standpoint, but just from a confidence standpoint, it just shows that there is a need for bearer assets like Bitcoin. What I thought was particularly interesting last week, I think it was last Monday, about 8-9 days ago, when First Republic was the latest bank to go under. But what I thought was probably most interesting there is that Jamie Dimon, after assuming First Republic, came out and said he thought that we were nearing the end of the bank failures. And I just think that's categorically untrue because deposits are still leaving banks in favor of higher yielding money markets. And there's still 6 times as many unrealized losses at banks than there is FDIC insurance. 600 billion of unrealized losses at the banks versus less than 100 billion now at the FDIC. So, I think that 4 or 5 weeks ago, regional bank stocks were going down largely because there was a real risk of just sudden disappearance of the banks. I think now it's actually not because you're worried about the disappearance of the banks. I think it's more that the banks are just not profitable anymore, right? Now that you lose deposits, which is a cheap source of financing, you have to replace that with more expensive financing. And at the same time, you still have all these unrealized losses from rising interest rates. There's just no way to make money as a bank right now, certainly not as a regional bank who is only doing straight net interest margin. So it's bad news for the banks. And I think probably the most interesting thing, in my opinion, is that, and I reference in our write-up, if you go to our blog and check out the write-up, I referenced something that I wrote in 2019 where there was a bunch of financial executives talking about how Bitcoin has no intrinsic value and Bitcoin is not an investable asset. And if you look at all the quotes that I put in that 2019 article, and you replace the word Bitcoin with regional banks, you get the exact same thing. So I'm going to read you a quote real quick, and but every time I say regional bank, just know that the original quote said Bitcoin, and you'll see that it fits. So here is one from Edward Jones. We don't like the specifics of regional banks, and we really think the price is moving around on speculation rather than something else. When you think about regional banks, you're looking to buy something that you hope to sell for more to somebody else who's more excited than you are. That's the essence of speculation. We would not advise investing in regional banks or speculating in them. If it goes up, sell quickly. If it goes down, sell quick, but get out quick. Here's another one from Alliance, actually. As an institutional investor, you could not actually explain a position in regional banks or any other regional bank in your portfolio as an asset allocation. The valuation of the regional banks is not possible as of today. They have no income. There's no intrinsic value. There's no guarantee by a state or central bank. It's an interesting concept, and I'm fascinated, but it's not an investment. And here's probably my favorite one. The value of a regional bank is in the eye of the beholder. This makes regional banks entirely unsuitable for investing in. And I think, again, a little hyperbole here, because obviously that was not the original quote. I'm just inserting it here. But, these regional banks sound a lot like instruments with no intrinsic value. And, maybe I sound a little frustrated when I say this, but I for one, am tired of people in glass houses who keep throwing rocks. Digital assets for 5+ years now have proven that they have real value. They have value in the form of community. They have value in some cases in the form of real revenues and profits, and they certainly have value as a bearer asset. And I just don't think you can say the same about bank stocks right now, which is entirely a made-up valuation based entirely on whether or not you believe the CEO when he or she says that things are fine during a bank run. Not to mention all of their profits are earned on fake money that isn't actually there when you need it. So that's my analysis of the digital asset market right now. Is banks bad, Bitcoin good? And I think that's the narrative you're going to see for the foreseeable future. So anything to add on that, Charlie, before we get into probably the more interesting topic here?
No, I think that's it. I think that if the past few months have kind of had any lessons that we should take away from it, it's that even these equities and debt instruments have a good amount of risk to them. You just don't see those cracks appear until something catastrophic happens. I mean, this was all kind of propagated by multiple meltdowns, Silvergate, FTX, and before that, Lunaterra destabilized crypto, and then everyone was like, crypto is the issue, and then you have sort of a meltdown in the traditional markets, and then you get to see that there is risk in those markets as well, and then you have something like a token that really is going to hang around long after any sort of bankruptcy. So there's some sort of value in that as well.
Yeah, for sure. So let's move on to probably what's more interesting, and coming from our solutions group, thinking through ways in which to use tokens on different entities' balance sheets, ways in which to help financially engineer some things. One of the things I've been talking about in the token world forever is that I think we've barely scratched the surface. Right? It's nice to talk about layer one protocols and decentralized currencies and things like that, but the reality is, once digital assets really take off, all of the existing digital assets today are going to be dwarfed by the size of tokens issued by companies and municipalities and universities and everything else. Like I think, in my opinion, tokens are the greatest capital formation and customer bootstrapping mechanism we've ever seen that fully aligns all of your customers and your stakeholders into one unit. So I think we're just going to see a floodgate of tokens one day, but it's being held back by two things, right? The first is the lack of regulatory clarity, at least here in the US, right? It's keeping any would-be and probably should-be issuers away from issuing tokens. But two, equally important, is there's no investment bankers. There's nobody pitching these things, right? You have all these creative ideas going on in the debt and equity market, and not a single creative idea in the token space. So with that said, you and I were talking last week about Voyager. Right. Here's a situation where Voyager, going through a bankruptcy process, they're in the process of now, the Chapter 11 was kind of always a joke, if you ask me. There was never a chance of this company restarting, but, at least under the guise of Chapter 11 at first. And now it's clearly a Chapter 7 as they look to liquidate their assets. But Voyager has a token, and the token is now tied to a defunct entity that will no longer exist. And that token has, as of right now, a $50 million market cap. To me, this is a lost opportunity. Why? We've seen this before, right? We've seen companies and projects go away, but the token is still sort of just orphaned and stays there forever, because it's not like it goes through, unlike a normal bankruptcy process where the debt and equity are actually wiped and replaced by new reorg equity. In this case, there is no process for a dissolution of a token in a bankruptcy process. So the VGX token is not going away. It's just the company that VGX token underlies is going away. So what are some solutions here? What could another company do? What could Voyager do here? Like, what do you think the future and the fate is of this $50 million orphaned VGX token?
Yeah, I mean, it's a good question. A lot of what I do is obviously working with those early stage crypto native projects, and I work with our labs team in different capacities to work on the institutional side and the security side. And I think what we've seen over time is that you can actually restructure these tokens. And so there is a case to be made where a more traditional firm out there, like some of the ones that we mentioned in that paper, or the two Satoshis that were released yesterday, I guess, might be able to utilize a token like this. Maybe that's within their capital stack and actually actively using that, establishing a new forms of utility within that token. I think there are examples out there. The Amazons of the world are looking into integrating a token that could be another layer on the cap stack, with the added ability to reward, purchasers or anybody that engages with the platform. But I think, one of the things that you and I discussed more recently was just the idea of using something like VGX, which is held by users that are, at least to some extent, familiar with the crypto native landscape, there's a quote unquote user list behind, or a customer list behind these token holders. So, you know, as we move forward in this industry, and the lines become blurred between traditional finance and crypto finance, you're going to start seeing investment bankers coming in and coming up with new novel ways and clever ways to restructure or integrate these decentralized tokens with centralized entities. And one of those could be, one of those companies we mentioned, such as a Fidelity or Robinhood, or on the other side of the spectrum, a Shopify or Amazon, actually, making a tender offer at a premium to those token holders to effectively acquire that customer list.
Yeah, I mean, and you hit it right there. At the end of the day, at a minimum, a VGX token holder is a customer list of
Right.
people that clearly have financial assets, that like digital assets and trading, that have engaged in blockchain in the past. I mean, that's a pretty defined and valuable list right now. So at a minimum, if somebody were to take over this token, you're buying an email list. At best, you're buying a vibrant community of like-minded people who are looking to continue these services that they were doing on Voyager in some other place, right? So it seems crazy to me that there aren't investment bankers just circling this, saying like, somebody should buy this, somebody should scoop this up, do a tender offer, and assume the Voyager community.
Yeah, no, absolutely. And I mean, it comes down to the primary questions that we list in that two sets, like who has the liquidity to do this? Who has a use case that aligns with the interest of these holders? Who has an existing customer base that isn't contradictory to those token holders? And who is already lagging the competition? Like that obviously cuts out a lot of primary potential acquirers. The SushiSwap and the Uniswaps of the world, they're massive, right? From a decentralized capacity, users of VGX most likely are already engaged in those sort of platforms. So what you want to find is projects and companies that have the liquidity to do this, that can actually utilize that customer base. One of those would be Fidelity. They just opened their crypto trading platform. They're trying to get people in. This would be a perfect, fit for them. Similar to the Shopify and Amazon, you could incentivize, or might be incentivized to effectively make that tender offer and bring over those customers to their platform in exchange for them generating some sort of activity on the platform.
Yeah, and I mean, I was a little tongue in cheek when I said I can't believe there's not investment bankers circling. We know why they aren't, is because they can't get paid off of this, right? There's no mechanism yet for taking a 6% IPO-like fee for brokering a deal like this. But I do think it will happen eventually. I mean, the FTT token, is another one, right? The FTT token still somehow actually trades and has, what, a $400 million market cap. And we've seen out of court restructurings before in tokens anyway, right? The Luna token, for example, right? The Luna blockchain. If Luna were a company, it would have gone bankrupt on May of 2022. But since Luna is not a company, it's a blockchain. It still produces blocks. It's still functioning. Its number one product, UST, obviously collapsed, and the future of the Luna blockchain is at best uncertain and at worst dead. Mm-hmm. But the Luna token still exists, right? I mean, again, and what I'm trying to get at here is like there's always value to options, right? A blockchain that functions and that has blocks is an option. A company like VGX, even if the company goes away, the token is an option. Like there is inherent value to just something that has no mechanism to actually go to zero. And I think that's what's interesting here. And you mentioned Fidelity, you mentioned a couple others. Obviously there's the regulatory issue here in the US, but outside of the US, again, that customer list is valuable. And I really think that there's been little examples of M&A here and there. We've seen a couple protocols that have, quote unquote, merged. We've seen some buybacks. We've seen a little bit of things here and there. But we haven't seen an outright, just complete assumption of another token yet. How far away do you think we are from that? Do you think it's, are we looking at one here with Voyager since it's only 50 million? Are we 6 months away, 6 years away? Like, what does it take to get companies and projects to start thinking about the value of these existing communities that are largely orphaned?
I think you need to start thinking about it now. But to your point, on the regulatory side, it's going to take time to iron out all of those different details. It's going to also take time to, again, try to better understand how traditional financial firms can actually get involved in this space. One I actually go back to all the time, and we've talked about this before, is EOS, right? That's another zombie token that's out there. It had a lot of value, many years ago, or a few years ago now, but now I think it's trading at market cap, fully diluted market cap of around $1 billion. I mean, that's a lot of capital. And there's a huge customer list. I think that's too big, right? That's a lot of capital. It's too big in the sense that there aren't that many people out there that would be willing to make this sort of tender offer and acquire those tokens at some sort of premium. That said, it's a large user base, and you can almost think about it. Another clever or novel mechanism might be to like equate it to almost a SPAC, right? 2021 was the year of the SPAC. There's a lot of liquidity. There's $1 billion in those tokens. So if you can find a way to access that liquidity, if you're a JP Morgan or you're a Goldman Sachs or you're a financial institution large enough to absorb that, like all the costs associated with integrating that blockchain technology into your own platform, you automatically onboard all of those people and liquidity. I think that becomes a challenge. And I say, there are two sides to that, right? Like the liquidity is a great thing because if you have $1 billion and you're bringing that in, it's obviously a major boost to your balance sheet and to your market cap. The downside is that in the case of something like VGX, as we kind of laid out, some of the math in the two Satoshis, $15,000 per user as an acquisition cost is extremely high, right? The PayPal's of the world, they're paying $10 to $20 to $30 probably in customer acquisition costs. So $15,000 for every single user isn't palatable. What you need to do is bifurcate the retail users from the hedge funds that are holders, and you need to place a value on that, do some sort of lifetime revenue analysis to really figure out where the value is. And that's kind of how you would triage that approach. But there is value in utilizing that. As far as timeline, it's going to take time to get through the regulatory, ironing out the regulatory details, and then getting those traditional firms comfortable with this technology and integrating this technology into their platforms.
Absolutely. Well, it's another fascinating case study. I think we write mostly about facts on our blog. Sometimes we talk about economic theory, and a lot of times we just talk about what could and should happen. I think this is one that definitely could and should happen at some point. We'll see what happens. So, Charlie, appreciate you coming on. Where can people reach you if they want to talk to you more about this?
Yeah, sure. You can reach me at my Twitter. It's at Charlie_Russell, 1L11 at the end there.
Perfect.
That's probably the best place.
Great. Well, reach out to Charlie, guys. Think through other solutions in the banking and M&A and other advisory type ideas here in the digital asset market. That's it for this week, guys. Appreciate everybody listening. Again, you can check out the blog, ar.ca/blog. We'll be back next week, guys. That's our two Satoshis. Thanks.
Thanks.